Hello everyone, if you are running a business or thinking about starting one, this video is for you. We are breaking down the key differences between a sole trader and a company, how they work, tax implications, and which one could save you more money. My name is Puneet and I help business owners to navigate finances and tax decisions. If you find this video helpful, make sure to like, subscribe, and leave your questions in the comments below. Now let's get started. In Australia, the two most common business structures are sole trader and company. But what do these really mean? In sole trader, this is the simplest way to run a business. You own and operate it under your personal name. There is no legal separation, meaning you and your business are one entity. Whereas in company, a company is a separate legal entity from you. It can own asset, sign contracts, and has its own tax obligations. So the key takeaway from here is sole trader is you and company is a separate business entity. Now let's talk about tax because this is where the biggest difference comes in. Sole trader taxation, your business income is your personal income. You pay tax at individual marginal tax rates, which increases as your income grows. For example, if you make 180K, you could be paying up to 45% in tax plus medical levy. Whereas in company, it pays flat tax rate, which is generally around 25%. This can be significantly lower than personal marginal tax rate, especially if your business is profitable. For example, if you earn 200K as a sole trader, you could be paying close to 47%, including medical levy. But as a company, you would pay around 25% tax, a potential 20% tax saving. So from a tax saving perspective, a company could be beneficial if you are earning a lot. Now, let's talk about tax because this is where the For example, if you make 180K, you could be paying up to 45% in tax plus medical levy. Whereas in company, it pays flat tax rate, which is generally around 25%. This can be significantly lower than personal marginal tax rate, especially if your business is profitable. For example, if you earn 200K as a sole trader, you could be paying close to 47%, including medical levy. But as a company, you would pay around 25% tax, a potential 20% tax saving. So from a tax saving perspective, a company could be beneficial if you are earning a lot. Now, what about setup cost and ongoing compliances? Sole trader, it is very easy to set up. Just get an ABN from ABR. You can do this by yourself free of cost, or you can spend $100 to $200 if your accountant is doing. Fewer reporting requirements, whereas in company, it is more expensive to set up, usually around $600 to $1,000, requires separate bank accounts, financial statements, and tax returns. You require more paperwork, SEC fees, business registrations, and compliance cost. Ongoing accounting cost can be $4,000 to $5,000 per year. So the key takeaway is sole traders are simpler and cheaper while companies require more paperwork and ongoing cost. Now, what happens if something goes wrong? Sole trader, unlimited liability. You are personally responsible for your debts and legal issues. If someone sues your business, they can go after your personal assets, house, car, and savings. Whereas in company, it has limited liability. The company is legally separate from you. If the business gets sued, your personal assets are generally protected. Like constructions or finance, prefer company structures for asset protection point of view. So the key takeaway from here is if your business has low risk, a sole trader is fine. But if you want protection from lawsuit, a company is safer option for asset protection point of views. So now the question comes is, when should you move from sole trader to company structure? Well, if your business is making over 100K to 200K per year, a company can save you thousands in tax. If you are in high risk industry, a company protects your personal assets. If you want to build a stronger brand and work with larger businesses, a company gives you more credibility. But remember, companies come with higher cost and more paperwork, so it is not for everyone. Now, which structure is right for you? If you're just starting out or having a small business, a sole trader is simple and cost effective. If you are growing fast, want to pay less tax, or protect asset, a company is the way to go. If you are still not sure, speak to your qualified accountant who can help you decide based on your business goals. Thanks for watching this video. If you found this video helpful, hit like, subscribe, and drop your questions below. I'll see you in the next video. Thank you.